Earlier this week, I highlighted a handful of COVID winners that have continued to thrive even as the world's mostly going back to normal, thank heavens. And that includes one of my old favorites, PerkinElmer, the maker of life science and diagnostic equipment that's made a mint off of COVID testing, but there's much more to it than that. And business remains excellent. On Monday of last week, PerkinElmer reported a terrific top and bottom line beat, and they also raised their full-year forecast on top of giving very encouraging guidance for the current quarter. And in response, the stock justifiably jumped 5%. It wasn't just the quarter, though. PerkinElmer also announced a major decision. The company's selling its applied, food, and enterprise services businesses to a private equity firm for nearly $2.5 billion in order to become a pure play on life science and diagnostics. I have wanted this to happen forever. Now, this is the weakest division, so after the deal, PerkinElmer will be a better business with a couple extra $1 billion in its pocket. In other words, it sells the slower growth and goes all into high growth. Let's take a closer look with Dr. Prahlad Singh. He's the President CEO of PerkinElmer. To learn more, Dr. Singh, welcome back to Mad Money.
Glad to be back, Jim.
All right, I've got to tell you, sir, I love this divestiture. It is a big one. Approximately 30% of your total revenues are going. So tell us what the new PerkinElmer will look like.
That's a great question, Jim. I mean, this just especially if you look at in this environment of macro uncertainty, the new PerkinElmer really is focused around high growth, higher profitability, and much better operating margin. This is essentially an evolution of our strategy around the portfolio transformation of the company. And COVID provided us the tailwinds to build a robust balance sheet, which, as you know, last time I was in your show, I talked about how we deployed it towards, further enhancing our presence in the life sciences and the diagnostic markets. For us, those two end markets provide a lot of growth, and we see continued growth in them over the next decade. So this is essentially an evolution of our strategy to build a high-growth business.
All right, now, those of us who are familiar with PerkinElmer might be sad to see the name PerkinElmer go. What is your new company going to be called?
Well, I'm open for any suggestions that you might have, but we've just started our branding strategy. And on a serious note, our intent really was that the PerkinElmer brand name, is very much attached to the legacy business of analytical food and enterprise. And that was one of the intentions of us having it go with the entity that has been divested. But really, this gives us an opportunity to create a new brand identity around the higher growth, higher profile life sciences and diagnostics business that we are building. So we will come out with a brand strategy around that over the next few months.
It does look like that you will be something that I know I wanted in one of my earlier books, the equivalent of maybe Danaher, Thermo Fisher. Those are two companies that were able to go through COVID and come out ahead, and PerkinElmer is the third. There really aren't that many other companies that do what you do, are they?
Not really. Actually, Jim, what this does is the creation of the new company that we are. It puts us in a financial profile where we'll really have no peers in the life sciences sector. We'll be a $3 billion plus revenue company with 10% organic growth and spitting out 30% operating margin, which puts us in a financial profile of our own. And really, that is something that we have intended to do, and the portfolio transformation now allows us to do that. Over the past 7-8 years, we've really transformed our portfolio around life sciences and diagnostics. We've deployed $7 billion in capital over the past 24 months, doing 10 plus acquisition, with the big one being a $5 billion plus acquisition of BioLegend, which makes us a global leader in antibody development. So this is, again, culmination of the transformation that has happened. And honestly, with the, full humbleness, I would say it actually puts us in a financial profile of our own.
I think that's fair. One last question. I want people to understand that if the economy slows down or the world slows down, there isn't anything about your clients that has anything to do with the economy, does it?
Not really, especially as you look at it, the cyclical resilience that the portfolio provides. Essentially, we've become a higher run rate throughput business where reagents and testing, those are two essential elements that are devoid mostly around economic vagaries in the marketplace. For example, our reproductive health business is focused around newborn testing for inborn errors of metabolism or genetic disorders. And we test every baby born in the U.S. as an example. And that is, pretty much resilient to economic vagaries. Similarly, around our life sciences business, our focus is around preclinical research and discovery.
Right.
We've had a leadership position around small molecules. With our recent acquisitions, we are building a portfolio for preclinical research and discovery around biologics, cell and gene therapy,
right.
single cell genomics.
Right.
So essentially, we are using the same channel to build out positions in those markets.
Well, look, those are the markets I want to be levered to. I think you've done a remarkable job since you were on. You told me not to worry. I was worried about the end of COVID, what it would do to you. You solved that problem. I want to thank Prahlad Singh, the CEO of PerkinElmer, a man of his word who did everything you could ever ask for and more. Thank you so much, sir.
Thanks, Jim. Good to be here.
Man Money's back after the break.